San Francisco's making headlines again, and not for doom loops, but for a comeback story. Is it boom loops? From cleaner streets to an AI-driven economic surge and a wave of return to office mandates, the city is reshaping its real estate landscape. What does this mean for buyers, sellers, and investors? Let's dive in. Welcome to On Location, the real estate podcast brought to you by the Brown Real Estate Group, where we talk about location as it relates to real estate. I'm your host, Rob Laub. Today's episode is special. It's both a 2025 market recap and a look ahead to 2026. From what some called a doom loop to what's increasingly looking like a boom loop, we'll cover the shifts reshaping San Francisco, cleanup wins, the AI surge, return to office momentum, and how all that is playing out in rentals and, more importantly, residential sales. Let's start with the city itself. Over the past year, San Francisco doubled down on cleanup and revitalization. Programs like Clean Corridors SF brought regular deep cleaning and graffiti removal to commercial corridors. And I've seen it firsthand. A couple of months ago, I showed up at my office to find an abandoned pile of trash, cardboard car radiator, who knows what. I called 311. They said someone will be there within 4 hours. They showed up in 45 minutes. Compared that to a couple of years ago, no one showed up. Tickets were closed as not found. Today, it seems like real action and real results. Honestly, if they start power washing the sidewalks faster than I can finish my coffee, I'll call that progress. Now the elephant, or maybe the algorithm in the room, is AI. What is AI? Well, at this point, it's ubiquitous. It's your email, it's your maps, it's music recommendations. Your toaster starts asking you about your morning routine. Well, don't be surprised. Jokes aside, AI is software that learns patterns and makes decisions, and sometimes better than humans, sometimes hilariously worse. And right now, it's powering one of San Francisco's biggest economic surges in years. We saw billions of funding for AI and AI-adjacent companies in 2025, plus major leases and team expansions. That demand translates into housing pressure. Median sales prices around $1.4 million, strong sales-to-list ratios, the tremendously low inventory that we had was all selling. Rentals also climbed too, with double-digit year-over-year increases in many neighborhoods. Another big driver this year, return to office. After lagging other metros, SF logged meaningful gains. Placer AI data showed office visits up 9.6% year over year in early 2025, and these figures increased as the year went on. And the public sector moved too. Mayor Daniel Lurie directed city employees to be in the office at least 4 days a week by April 24, 2025. Roughly 70% were already 5 days, and the remaining third were on hybrid schedules. Downtown foot traffic and small business activity respond to that kind of consistency. Office vacancy does remain elevated, however, at 33 to 34%, but it is trending down, with positive absorption returning for the first time since 2019. This is another signal that the pendulum is swinging back. But of course, we talk about location as it relates to real estate. My house here versus your house there, well, they're not the same, even if it's the exact same number of bedrooms. So here's the macro backdrop. Nationally, home prices rose 1.7% year over year in late 2025. That's below the 3% inflation rate. So in many markets, real estate didn't keep pace with the cost of living. Meanwhile, the pandemic zoomed towns that surged on remote work, think Austin, Boise, Bend, they saw inventory spikes and price cuts, and listings lingered. Some of those markets are correcting back toward local incomes. San Francisco, holding strong. The 1.4 median is essentially flat year over year, but the fourth quarter, we saw some uptick, and we'll talk about that. As competition has returned, 7% over list is the average, and hot homes are closing 17% over list price. Very limited supply, especially near tech hubs, and for single families, plus the return to office, has kept demand intense. We take a look at the numbers every week, and as the data from 2025 comes in, the last quarter of 2025 is looking even stronger than initially reported. So the total sales volume in San Francisco, residential sales, 8.85 billion. That's up almost 13% year over year from 7.83 billion. So 1 billion better. Not a bad place to be. And the average sales price in November and December saw double-digit gains, 10% and 17% for those months. That fourth quarter surge with October, more sales, higher prices, 23.97% higher in October, 10% higher in November at 7.87 million. And as it trails off into December, the market stays strong with buyers out there buying 653 million in real estate trading hands, 48% higher than December of 2024. Nearly a 50% jump, which really underscores the intense demand despite the tight supply. Now, second week of 2026, we've already seen new listings coming to market. We're seeing buyers out there actively looking. Our team, which has done 648 million in the last handful of years, we've got 2 deals in contract in this past week alone. Things are moving quickly. And again, that new inventory is coming back. But what about a look ahead? If we try to look at 2026, well, what does the future bring? Of course, return to office will play a factor, but the AI segment could have a bigger, even outsized impact. Lots of talk about IPOs for AI-related companies. Databricks, Cohere, Crusoe Energy have all been flagged by Crunchbase as probable or very likely. And AI, Anthropic exploring paths to public markets as well. So why these initial public offerings matter? Well, they create instant liquidity for founders, early employees, and investors, historically boosting luxury home demand, especially close to work centers. So if competition feels strong now, 2026 could amplify it. What does this mean for you? I mean, the buyer takeaway is prep for a competitive spring and summer. Get pre-approved, talk to your agent, get a plan together, get looking, get familiar with the property and what's available to you. Get out there, look at them, and be ready. Be ready to write an offer. Be ready to even get into counter offers. Make sure you're in good hands and in a good place to find a good deal. And don't be afraid to get into those negotiations. With a good agent on your side, really nothing to worry about. On the selling side, it really comes down to leaning into pricing discipline and presentation. So well-located turnkey homes are going to command a premium price. Work with a good agent to get your home out there and present it in the best way possible at the right price, get a lot of interest, and let the market take it to where it's going to go. On the investor front, watch for commercial to residential conversions. Policy tailwinds plus pricing dislocation can make the math work. And on that note, we have a commercial unit right now that could be a fantastic residential conversion opportunity. If that's interesting, reach out and let's talk. From doom loop to boom loop, 2025 was the year San Francisco stabilized and turned the corner. 2026? It's shaping up like a year of acceleration, more tech wealth, more in-person momentum, and more opportunities for a smart strategy. Thanks for tuning in to On Location. Subscribe for more Bay Area insights. I'm Rob Lobb. See you on location.